Once again, I'm Bear Schultz, SP500, and it is still July 31st, 19th part of a long series through the end of 2034, which I believe will end the Great Depression. Essentially, I want to show you the weekly model and the daily model of the VIX as the markets are starting to sell off because of the tariffs. Now is my opportunity to really showcase the VIX model, the new theory, and so that everyone can see just how well it does. The S&P model seemed to also support roughly on August 8th bottom in the markets, and so now is really the time to bring out the VIX models and to try to show how they can forecast a major peak in the VIX. If there's strong support in the weekly and daily models for the VIX, then hopefully, obviously, you can get a really good sell-off. So I've seen a lot of alignment in them. So and then with kind of hopefully the wind at my back into August 8th on the sell-off window here, hopefully we can break just below 6,000 on the S&P 500 by end of day August 8th. Or plus or minus maybe early morning August 11th, but we only have 5 days, so 5-6 days, so it really is the time to try to show the hopefully the high accuracy of the models when they're aligned. So thank you for joining me. So this is the VIX weekly data model. You can see that I'm using the gold trend line. It has a beautiful 1, 2, 3, 4 count going out to, again, the first week in August for a macro peak in the VIX. Again, so you need all the touch points. You need a series of touch points, number one. And again, all these touch points were created in late 2023 into late 2024. Okay, so my whole theory is that historical data predicts the future. Okay. Now, if we're going to have some type of major run up in the VIX, a major rocket move in the VIX upwards into roughly August 8th, plus or minus, I would hope to see it number one in the weekly, right, with a huge numbering sequence of hits, and so that's there. And you can also see the hits that are going out to roughly October 20th as well. Again, this is the weekly data for the VIX, and I multiply it by 1,000 so that there's not any little gaps of any sort. I basically try to magnify it with multiplying by 1,000, make it more like almost like the S&P index, if you will, or a NASDAQ index. So it's just a fraction of a decimal, obviously becomes much greater. So number one, you need this setup in theory, right? In its purest form, you'd want to see that the macro scale or macro model is projecting or flashing some type of reading where the VIX is going to take a major pop upwards. Okay, so this is the weekly. We have a beautiful 1, 2, 3, 4 count. We haven't seen the VIX skyrocket yet, right? We have not. In all of July, we have not seen the VIX make some type of skyrocketing move, right? A lot of times in life, especially the stock market, when the markets take a big move, in the early days, I would be the sucker that would chase it and, feel like, well, it's going to keep carrying the momentum or whatever, but the move already took place, right? So, number one, so that's a good starting point. Has there been some huge move in the VIX? Has the VIX taken some 10, 12 point move prior to this prediction? No, it hasn't. Markets have been extremely strong. The VIX has been down in the 15, 16 level, right? And then the weekly model is projecting some type of major move upwards, so some major peak, some macro move up in the VIX in early August. So those 2 points have to be obviously in order. And then the next would have to be that the daily model would sync hopefully with this, if so that's kind of like another check, right? So let's move on to the daily model. And so then again, the daily model, the daily VIX peak model, which, as I discussed in the previous video, has a double alignment, double sync pattern for roughly August the 8th for a major peak in the VIX. So this is what I really want to do going forward. I want to be able to show in my videos, show in my presentations, my theory or my justification for a major move in the VIX on the weekly scale. It needs to be there. It needs to prove itself, right? Or that would be the optimal model. Many times the big moves just have not been in my models. I think I build a great model, and then the big moves, they're not there, right? So that it immediately eliminates that model's ability to really draw out the big money-making moves, right? So I want to have the model that predicts major moves before they happen. And again, the VIX has not skyrocketed, and that I have to really belabor that point, because we want the VIX to take off. We want it to go up 10, 12, 15, 20 points from its low. So it bottomed out like 15. We want it like at 33, 34, 35, 36, 37. Put some curiosity, see if people think it can get near 40, right? We want that type of FOMO around the VIX, that it might possibly reach 40, right? And get the algos really selling. So with that said, the weekly model had a very beautiful count, and then you jump over here to the daily model with the black trend lines. You have a beautiful 1, 2, 3, 4 on the right. You have a very beautiful 1, 2, 3, 4, 5 on the left, both projecting out to roughly August 8th. So all things, and I have to believe that the VIX just doesn't one day jump 20 points, right? You would think that it would build to some degree over time, right? So April 8th didn't happen by itself, right? The markets crashed into April 8th. The June 18th or 20th, 23rd low, the VIX was still elevated, right? It didn't just jump some huge amount. The VIX just doesn't jump 20 points in a day. It might jump 5, 6, 7, right? It might jump up 50%, and that's a big move for the VIX in one day. So at 15, a jump of 7 points on the VIX would be a big move, but it's not going to jump 20 in one day. So I would have to assume that in order for the VIX to peak or hit some macro high around August 8th, there'd have to be a number of days preceding that, 5 to 7 days, where the VIX just keeps elevating higher. So I would assume that this 5-6 day window that we have right now into roughly the model's peak it's enough time. It's enough time. And you can see the zigzag graph is pulled upwards at the top of the graph, and the graph is inverted because it's looking for peaks, right? So the peak is when the model, when that sawtooth graph is near the bottom of the graph. When the sawtooth is up towards the top of the graph, that means the VIX is at its lowest point, okay? So like in the teal line around mid-April, the sawtooth graph was near the bottom of the graph. That's when the VIX was at its strongest, okay? And yes, there is a little bit of offset here. Like you'll notice with mid-June, the sawtooth graph is not peaking at the date that it's picking. You have to offset the graph a little bit in order to get to sync with the actual dates. It's hard to explain, but you need the graph to sync with the actual date in the future. It's not so important that the graph syncs at the point in time where it peaks. What's important is the trend syncs with the reality or the real events that happen in the future, right? I don't really care that the sawtooth isn't at its max around June 18th. That's not my care. My care is that the trend preceding it was predicting that the VIX would be around its max at around June 18th or 20th, when the VIX truly was at its maximum value, right? And when markets were at their lowest value, their best buying opportunity value. Okay, so that's my main desire. I used to think that I had to get the sawtooth to match up with the prediction at the very end. That's not what you want. You want actually to predict everything correctly prior, and where it falls out at the end is not so much a big deal as long as you are accurate with the date you pick, because at that point you're more looking at the markets, right? You want something that's going to precede everything based on the trend, and if you would have exited your VIX around the 18th or 20th, that would have been the perfect time to do so and go long, right? And the same with roughly April 8th, 9th, 7th, somewhere in there. That was the perfect time for a prediction of the peak of the VIX to peak and the markets to bottom, right? So therefore, August 8th, this is going to be a beautiful test run of the VIX models, because I've never had a really good working model of the VIX. You don't see me with a lot of videos for the VIX, right? Usually it's S&P. But if all of a sudden I can get the VIX models working just beyond wildly accurate, then obviously this is going to be my double check, a really good checkpoint to make sure that my prediction for a bottom in the market, or maybe I can get my bottom models for the VIX even working right. That would also spell out a peak in the market, right? A bottom in the VIX, peak in the market, and so forth. So hopefully you've enjoyed tonight's little part 19 of the VIX weekly and daily models. I'm really excited to see how this plays out, because I really like this 1, 2, 3, 4 right here you're seeing on the daily scale. I like the 1, 2, 3, 4, 5. I really like the weekly models per trail, the 1, 2, 3, 4. I think it's gorgeous. I would, if I had a really nice printer, or if I had an artist, I would just have it painted, muraled up on the wall if it comes to pass as it predicts, because it's just gorgeous. The 1, 2, 3, 4 in that, and the 1, 2, 3, 4 here, to me, they're a thing of beauty. So I'm, quietly hopeful that they're highly effective in predicting where we're going to see the max upside in the VIX for a prediction here around August 8th. And again, this could become a very effective tool going forward. So I'm very excited to see how this plays out. And again, I think that weekly VIX model is going to be play the main role, because really that defines, if that becomes hyper accurate, that's going to really define where I take my short positions, right? That's really where I'm going to imagine that the VIX really explodes if it becomes hyper accurate, if it is true. And I really like how the VIX has not really made a huge move yet, because I feel like odds are highly still in our favor, right? Much more so than if the VIX would have already exploded, and then you're like, well, could the move have already happened? Could the model be offset in such a way where it missed it, right? Could it be too late in the prediction? Whereas in right now, it still seems like it's synced, right, with reality. So I mean, if markets were to really crash here, you could really get the VIX up above 30, maybe into the mid 30s. We'll see. Maybe even still high 20s would be pretty sweet. From 15 to 30 in the next 5-6 days, that's 100% move in the VIX. That'd be pretty sweet. So I'm hoping it gets up to 34. It's one of my favorite numbers, or 43. So anyways, thanks so much for watching. I'm B.R. Schultz, SP500. Until next time, only 62 months until the Great Depression kicks off. So thanks for joining me for this 10-year journey in vlogging, I guess you might call it. Take care. Again, this is just a snippet of the GoFundMe page. I didn't want you to forget that, so thank you. And please bookmark it, whatever, and watch it over the next decade or into late 2034. Thank you so much.